Welcome to Invest. We talk about investing, finance, and professional development. As the current time of 8:34 a.m. on Eastern Time on July 6th on Wednesday, Ethereum contract at $1,134, up about 0.34% so far. With respect to overall crypto market and the equity market, we are still normalizing across the spectrum, kind of a mixed bag, right? With I would say the equity side of the house, all down respectively on a future perspective about 0.35%, so not a significant amount. Oil prices has dipped to below $110. It's actually trading in approximation around $101, $102. And respect to the 10-year yields is also dipping as well at 2.762% in comparisons to weeks ago when it was like reaching all the way to 3.3% at one point. And what's driving the stir that we saw, across the market yesterday? We saw like a slight pump as we were closing in. Basically, it was institutional investors and obviously some selective retail investors chasing in, hedging ahead of the Fed's minutes that's coming out today, right? And the minutes is basically confirming on the June FOMC meeting, right, which we got the confirmatory signal from Jerome Powell on the 75 basis point. So the next major test that we have to understand is really with respect to the next FOMC meeting, right? Are we gonna be going with the 75 basis point again, or are we gonna be going with more of a normalized level, 50 basis point, and then we see more progressions from there, contingent obviously on the job numbers and the containment of the inflationary pressure, right? So we don't know what's going to be happening because, based on the collective wisdom and the observations I've been getting so far, every single time, the Feds make the changes subsequent to the reaction of what happened, right? Rather than the other way around, like they hedge and they do proactive measures before the pressure on the inflationary front gets overwhelming, right? So they have to do drastic, aggressive measures to basically pull the needle back down. So we'll see what that means this time, right? We are basically about on the CPI report will give us some foreshadow, which is about like a week like a week out from now, and then from 2 weeks and 2.5 weeks out from now, we'll see the FOMC meeting confirming on obviously the inflationary pressure and the rate hike. And are we gonna see more optimistic side of the spectrum going forward, or are we gonna be digressing, reaching to even lower levels of recession, which is something that concerns me, right? Because if we do, and I would say the technical kind of tells though, would translate to a much lower price for Ethereum to be reaching below 4 digits, which we have identified so far, right? So let's just dive right into the technical to see what's happening. Again, right, the futures is falling slightly after the rally, which is normalized, but also combined with the Fed's minutes that we are foreshadowing, driving the level that we at right now. So respect again, recording time of 8:38 a.m. on the Eastern time. We are at 11:50 technically, just a hair below it, but we did not get above it, so technically we're below it, right? So the next level of comfort for this asset is going to be somewhere around 1050, right? And as we ideally, which will be likely to break 1050, you will have a cross section downward. You will be reaching much lower levels, right? 950, 850, 750 from here, right? Respect to Bitcoin, same thing, right? I would say we're relatively stale around the momentum. We're at 20,000 right now because of the slight rally that we had, and we opened above 20,000 as well. But as we digest, the Fed's minutes to see was there anything that was contradicting, or did we miss anything based on what we have heard so far on the media front versus what we see on the actual transcript, that would convey, the confirmatory signal, right? But overall, I would say the trend is still, in the weeks out perspective, is still, negative. We are still we've curved up for quite some time, so we need to cross down. At the same time, we need to sustain a much stronger momentum than the level that we at right now. So levels down would be obviously 18,500, 17,500 respectively. Classic up basically flat. Same thing, right? We have to cross down to cross up, right? So levels down will be, right now we're basically at $15, like $14.50, $14 respectively downward from here. Dogecoin up 0.31%. Levels down would be somewhere around like 6 cents, 55, 5 cents respectively. Cardano down 0.13%, 45 cents at the moment. Levels down would be 40 cents, 30 cents respectively. Solana up 7.5% at $35 right now. So we are basically in between levels, right? So it's either we go up to 38 or go down to 33. So levels in between right now makes sense, right? Because we kind of consolidating, but it's not sustainable because ultimately we need to cross down, right? So coming down to 33 all the way to even 25 or 30 would be very logical. XRP up 2%. So we basically consolidated right now, very tight. Still bearish, right? So coming down to lower levels like 30 cents, 25 cents respectively, very logical. Polkadot's up 4% so far, at 66.9 right now. Levels down will be obviously 6.5, $6, respectively from here. Algorand up 2% so far at 30 cents right now. So levels down would be 25, 20 respectively, all the way down. Shiba Inu up 0.25% so far. We are forming some sort of like a wedge right now. But the wedge seems like it's we have to see, right? Are we in a upward formation or a downward formation? It seems like we're kind of stale right now, but it looks like a flag, obviously. But based on the chart that we see from below, it's a lot more clear that you need to cross down before you cross up, especially we are at the 50 out of 70. So this could technically be like an upward ascending triangle, and I think it is, even though it doesn't look very much like it. But based on the technical charts below, MACD and RSI, it shows that the level of coming down, as we break through this, right, would be likely. And I think the level down to be 850 to 750 is more logical. Polygon up 1% so far at 51 cents at the moment. Levels down will be 40, 35 respectively. And then lastly for AVAX at $18 right now. So obviously we're still consolidating, very flat because of the long elongation. Momentum looks quite different though, like it's kind of reversing up, but we'll obviously get blocked around 50 out of 70. So that means the highest we could technically go will be somewhere around like $20. That's about it, and then reverse back down, right? Overall, like RSI is positive, negative. I would say negative, so it's like net is still negative across the spectrum. All right, so hope you guys have a great Wednesday, and appreciate you for joining me again. And I have some bad news. My sister actually got COVID from her trip in Miami, and I'm guessing like they're, and also like with respect to what we've heard earlier, yesterday, seems like California is having a breakout as well, and also overseas in China. Seems like the COVID cases are spiking all over again. And also a couple of my friends that actually visited me from San Francisco, when they were spending time in New York, they all got it for some reason. So it's definitely worrisome to see, just I'm not sure if it's a coincidence or just like the pattern that we are experiencing, observing, just like me personally. Seems like the cases are quite increasingly getting more severe, right? So that's definitely be careful, and I hope you guys all stay safe, and and I appreciate you for joining me again, and have a good day. Take care. Bye.